Hey, it's Terry Bontemps. Hey, welcome back to the channel. This video that I prepared for you entitled The Financial Pain Ahead, The Real Cost of HOAs That Ignore Their Reserve Studies is the single most important documentary that I have ever produced. HOAs are coming after your wealth, ladies and gentlemen, and they're not going to stop. And I want you to know about it before it's too late or you're facing foreclosure. I highly encourage you watch it multiple times to see how your wealth is being stripped away from you through your HOA's special assessments. There are 3 questions every single homeowner should know right now, and if you don't know the answers, you are already in a bad position. Number 1, are special assessments projected for your HOA? And if so, when? This reveals the timeline boards never disclose. Number 2, if special assessments are coming, what is the estimated cost per homeowner? This quantifies your financial exposure. Number 3, will there be multiple special assessments over the next 1 to 3 years? This shows whether your HOA is in a multi-year collapse cycle. Most homeowners can't answer these questions, not because they don't care, but because the documents their own HOA hands them don't add up to a clear answer. And this is something the board never wants to discuss with you because they don't know and won't tell you. I'm going to tell you something your HOA will never say out loud. If your HOA is underfunded, even by a little, you are personally on the hook financially for tens of thousands of dollars. Not the board, not management, you. Special assessments will wipe out your wealth, savings, equity, and retirement plans. Watch this video with your spouse and family so you can start preparing yourself now before the special assessment arrives in your mailbox unexpectedly. Protect your wealth today by going to HOA TrueView.com. HOA TrueView.com. If you're a homeowner in an HOA community, give me a call today at 916-470-3869 so I can help you preserve your wealth and share with you your total financial exposure. Enjoy the video.
This is the part no one will ever tell homeowners, because if they did, the entire HOA industry would collapse overnight. The true cost to homeowners when HOAs fail to fund reserves. The financial cost is not just a special assessment. It is total financial exposure, multi-layered, multi-year, multi-decade, hitting every part of a homeowner's life. When reserves are underfunded for years or decades, the special assessment becomes inevitable, massive, repeated, and unpayable for most families. Moderate underfunding, $30,000 to $75,000 per unit. Severe underfunding, $80,000 to $150,000 per unit. Catastrophic underfunding, structural failure, insurance loss, $150,000 to over $300,000 per unit. These numbers are not theoretical. They are documented across Florida, California, Hawaii, Colorado, and the Northeast. Because the HOA is not paying for a single repair, it is paying for 20 years of ignored repairs all at once. And homeowners, not boards, not managers, will pay with their savings, their equity, and their homes. The hidden cost. Permanent dues inflation. Once reserves collapse, dues must rise. There is no other option. Dues rise to pay for emergency repairs and to pay back loans taken out to cover special assessments. Dues rise to pay higher insurance premiums, higher vendor costs, and deferred maintenance that never stops. Typical dues increases, 25 to 50% immediately. 50 to 100% within 3 years. 100 to 300% over 5 to 10 years in collapsing HOAs. And here is the part homeowners need to understand. This is permanent. Once dues rise, they never go back down. Not next year, not in 10 years, never. Your monthly cost of ownership has been permanently reset. Your budget, your savings, and your retirement absorb a loss. The property value cost. Equity collapse. When an HOA is financially unstable, the damage spreads fast. Buyers flee. They will not touch a building in trouble. Lenders refuse mortgages. The financing pipeline shuts down. FHA and VA financing disappears. Entire buyer pools vanish overnight. Units become unsellable. Prices collapse. Early collapse, 20 to 40% equity loss. Mid collapse, 40 to 60% equity loss. Full collapse, 60 to 100% loss, zero equity, negative equity. This is how homeowners lose everything, even if they never miss a payment. The personal cost, savings, retirement, liquidity. When an HOA collapses, homeowners are forced to liquidate everything they have. Emergency savings, 401k, IRA, college funds, drained. Home equity lines, personal loans, credit cards, family loans, every option exhausted. Typical personal liquidation, $50,000 to $200,000 per household. For retirees and single-income families, $200,000 to $400,000. For fixed-income seniors, everything, every dollar they have. This is the part the industry hides. HOA collapse forces homeowners to cannibalize their future. To pay for the past. The life cost, divorce, bankruptcy, foreclosure, homelessness. When the financial extraction becomes unbearable, lives unravel. Divorce. Financial stress is the #1 cause. Special assessments accelerate marital breakdown. Bankruptcy. Most families cannot absorb a $50,000 to $150,000 hit. Bankruptcy becomes the only option. Foreclosure. HOAs can foreclose faster than banks. They do not need to prove hardship, only non-payment. Displacement. Owners are forced to sell at a loss. Many walk away with nothing. Homelessness. The final stage of HOA collapse. This is already happening in Florida and California. The life cost is the cost no one ever agreed to pay. The generational cost. Wealth transfer out of homeowners. This is the most disruptive truth. HOA reserve failure is a generational wealth stripping event. It transfers wealth from homeowners, families, and seniors. From first-time buyers and middle-class workers. To contractors, insurance companies, and management companies. To attorneys, banks, and private equity investors buying distressed condos. This is not a one-time event. This is a permanent extraction cycle. Wealth that took generations to build is being stripped in months and transferred permanently out of homeowners forever. The total cost, the full financial exposure. When you add everything together, the real cost to homeowners is staggering. $150,000 to $500,000 or more per household over 10 to 20 years. This includes special assessments, dues increases, insurance increases, and emergency repairs. Loss of equity, loss of retirement, loss of savings, loss of liquidity, loss of sellability, loss of stability, loss of home, and the loss of future wealth for the next generation. This is the true cost. This is the cost no one tells homeowners. This is the cost baked into the collapse.